Good evening, folks. Welcome to Contrarian Trader. This is Robert Desmond. It is Saturday, September the 12th, 2009. Folks, going forward, YouTube has become very, very strict with keeping the limit of the video time down to 10 minutes. So what I'm going to do is going forward, I'm going to break up the week ahead commentary into two portions. One is an analysis of the overall market. I'm going to issue that on Saturdays. On Sunday, I'm going to issue video, just getting into a little bit more detail on the stocks that we're watching, our intended trade, why we're going to trade them, and what are we looking for in terms of a trigger mechanism to execute those trades. So please stay tuned for not just the Saturday video, but a Sunday video. And I think that breaking them up into two separate segments will have more value to it and spend more time on each topic. So let's take a look at last week's trade. This is a chart, a weekly chart of the S&P 500. And as I mentioned last week, I was neutral to bearish on the markets, and I maintained that position. And one of the targets that I had set was the 1040 level on the S&P 500, which we hit last week. Now, while we had bullish pricing in the markets, the volume was actually very bearish. And I brought this up last weekend as well. This is the divergence. When you have prices going up and up volume going down, that's a negative divergence. Ideally, you'd want to see up volume continue to rise along with prices. That means that there are net buyers out there coming out and purchasing those shares. I've maintained for the longest time that this market is rigged. It's rigged by Treasury. It's rigged by Geithner in Treasury. It's rigged by Bernanke in the Federal Reserve. They are propping up prices right now. And brother, when the markets finally decide that they're going to dump right at these resistance levels here, if it doesn't happen at the 1050 level, more than likely it's going to happen at the 1100 level. And when we begin to collapse, there isn't going to be the support. You're going to have this is all air over here. There are no real buyers. All this is spiking the markets to scare the short sellers out of their positions. That's all this is from, I'd say, the beginning of July through present day. That's all it's been, is short covering. And it's a gimmick, and it can only last so long. Effective, yes. It's only going to last so long. So I urge you, please do not add new long positions here. Begin to look at short positions and rotate out of your long positions. Take profits. Live to play another day. This is not going to continue much longer. Let's take a look at the IWM. IWM, you have a similar situation. You don't have as many financials here. This is on a weekly basis as well. And we're hitting resistance at the $60 level. Volume, as with the S&P 500, it came in lower last week. And could we see a spike above the $60 level? Absolutely, absolutely. It doesn't shock me anymore what the government and what Goldman Sachs and J.P. Morgan Chase have the ability to do in this market. It's totally manipulated. So I'm keeping an open mind. I see a setup for a decline in this market. I've seen it for the past couple of months. Has it gone against me? Yes. Have we maintained long shoot positions? Yes. Have we profited? Yeah, sure. It's rigged. Okay, I'll profit along with it, but there's going to come a day it's going to stop. It's like musical chairs. The last one holding their shares is the loser. And unfortunately, 9 out of 10 times, instead of 99 out of 100 times, it's a small investor. Please don't let it be you. You're smart enough to watch videos like this. People that know the game, don't let it be you. Do not buy right now, please. Begin to take your profits off the table and open up your short position. Last week, the U.S. dollar. I mentioned last week that there was a trend line, a support level line here, a trend line, that was a very strong one that went back to September, October of 2008. We hadn't visited it. We had consolidated here, and I mentioned that a decline below this level, the next logical support level is going to be the lows of 2008, and that's down here, the between 72.50 and 70 on the U.S. dollar. We broke below it last week. Now, generally, the weaker dollar has been bullish for stocks, but there's going to come a point where that's no longer the case. So, and the reason for that is that interest rates are eventually going to have to move up, and a declining dollar, you're going to have the Chinese who hold vast amounts of our dollars are going to apply more pressure to the Federal Reserve, Mr. Bernanke, to begin to raise interest rates to preserve the value of their dollar investments. If they do not come to the defense of the U.S. dollar, the dollar will continue to deteriorate, and the Chinese will have no alternative but to begin. They won't. You hear a lot of pundits out there saying they're going to dump all their dollar. That's not going to happen. They'll just crush themselves. They will divest. They've already begun investing it in the euro, the renminbi, and other currencies. They're already divesting dollars and diversifying into other currencies. So expect to see more of it, and interest rates head higher. And then as soon as the market anticipates higher interest rates due to declining dollar, that general positive weak dollar is going to become a negative. So use caution. Now, you're not hearing this spoken a lot about on CNBC, but what's going to happen in mid-October is that Treasury, Mr. Geithner, young Timmy Geithner, is going to have to go to the Senate and request an increase of what I anticipate to be a $1.5 trillion increase in our debt ceiling. It's because our debt ceiling, which currently sits at $12.1 trillion with a T, $12.1 trillion will be reached by October 15th. The U.S. is borrowing $30 billion per week to pay off its debts and to keep the government going. They're going to have to borrow have that ceiling raised by $1.5 trillion to avoid coming back to Congress before the 2010 election. Because if they need to go back for a second request before the 2010 election, the Republicans are going to crucify them. They're going to humiliate them in public. And the Democrats don't want to be humiliated. They're already in enough trouble with the crap that they're pulling. So they're going to want to get that debt ceiling raised with one fight. That's in October. Expect it. Not hearing it spoken about yet. It's coming down the pike, guaranteed. Let's begin to take a look at the retail holders. Now, we're at resistance at the 200-week moving average on the retail holders. Look at the volume, declining. This cannot be ignored. Let's take a look at the Baltic Side Dry Sea Index. I had anticipated a bounce off of this support level. We didn't get it last week. We're seeing a consolidation. This is not necessarily a bearish pattern. We remain in an uptrend, but it appears to be flattening out. If the Dry Sea Index begins to break down below this support level, you can expect this economy, or the stock market, the economy's already shot, the stock market to break down as well. Keep an eye as well on the 10-year yield. You saw a pullback last week. If we begin to turn around and head higher, break above the 4% level, that's a trigger. The Chinese do not want to see the 10-year bond trading above the 4% yield mark, because that means that the value of their bonds that they hold in the United States are becoming they decline in value. So they do not want to see that. My final point here today is going to be on this is a daily chart. I'm using it for the purposes of illustrating where we are technically on the banking index. This is the BKX.X. And you can see, I mentioned this last week, and it's beginning to take more of a formation. I said that we were starting to see a head and shoulders formation form on the banking sector and the XLF. And here you see it. Here's the left shoulder, the head, the right shoulder. So you're also seeing a decline in the RSI, the stochastic RSI. You're seeing the weakness. This is a divergence. Ideally, you want to see this strengthening. It's not. It's heading lower. So Just be careful. Can they spike this market? Yes, absolutely. The games that are being played are horrendous. Um, it's an absolute catastrophe what they're doing here because they're setting the small investor up for massive disappointment. So please check in tomorrow with my next video, and we'll discuss the trades that we're looking to put on. Most of them are short trades, so you'll want to be interested in taking a look at that video. If you have any questions, please email me at robert@contrariantrader.com. I look forward to hearing from you, and have a great weekend, okay? Thank you.